A very good afternoon, class. So, last week we finished with lesson number 7, that is assignment and sequencing. So, class, before we start today's session, just observe these images. What do you see? What is the first word that comes to your mind when you see these images? Just think and observe. I hope you all must have gone through the images. Wait, there are more. All right. So, what was it that came to your mind when you saw all these 5 images? Let me take a guess. Was that the word risk? Okay. Our lives are full of risks. Risk happens or occurs due to uncertainty. It involves a loss or some other undesirable or negative outcome. All of us face some types of risks in everything we do and every decision we make. We look for ways to avoid risk by taking preventive steps. All right, class. Moving forward with the video or the slide, just again observe these images and think of the one word which is common in all these images which you are seeing just now. There are more to go, so keep observing. Okay, class. So, some of the questions before I move on, I would like to ask. Can you tell me what is the job of a security guard or a watchman? Why do we use lock and key? What is our motto behind that? Whenever y'all go to water parks like Water Kingdom or any other resort, why is it that we use these safety tubes while we enter into the water? What do our brave soldiers do on the borders of our country? So could you all find the common word in all these pictures? Again, let me take a guess. Correct. They are all related to our security, to our safety, for our protection. However, it is impossible to completely prevent every possible risk, but we can try to minimize the impact of the risk by protecting ourselves from the loss. So, class, there is a way of managing the risk in order to protect our life or property or vehicles or any other financial assets against possible damage or loss due to contingencies like theft or robbery, fire, flood, earthquakes, accidents. And this is called none other than insurance. Yes, class. So we are starting with our next chapter of Maths 2, that is lesson number 2, insurance and annuity. For the time being, we are just focusing on the first part of the lesson, that is insurance. So I hope you all got what we are going to cover today. Insurance is the creation of some security or monetary protection against a damage or a loss. Insurance is a contract which is done between two parties, that is the insurer, which is the company, and the insured, that is the person who is buying the particular insurance policy. The insured promises to make regular payments of a certain sum, which is called as a premium, to the insurer, that is the company, for a certain time period. So basically, the person who is buying the insurance policy is called as the insured, and the person who is giving the policy, he is called as the insurance company or insurer. the insured person promises to make regular payments of a certain sum, and that particular payments are called as premium, which is to be done to the insurer. Against that, the insurer promises to pay a certain amount back to the insured person depending on whether the person dies or maturity period, that is end of the contract. So we'll be seeing these points again further. Now there are types of insurances class. There are two types. Number one, life insurance, and second, general insurance. When I say life insurance, it means it is related to us, human beings. When I say general insurance, it is related to all the goods, all the tangible assets. That is our property, our vehicles, everything, which includes fire, marine, and accident insurance. We'll be seeing all this topic one by one. Now, what do you mean by a life insurance? In the life insurance, as you all know, the person who agrees or wants his life to be insured, he pays the insurance company a certain amount of money periodically, maybe monthly, quarterly, half yearly, or yearly. The amount which the person pays to the insurance company is called as the premium. In return, the insurance company promises to pay a certain amount of money back to the insured person in case of his death or maturity period, whichever happens first, that is end of the contract. This particular value, the amount of the policy which the person buys from the insurance company, is called as the policy value. For example, if a person purchases a policy value of 80,000 rupees, so this 80,000 rupees is called as the policy value of the particular insurance policy. Moving on to the next topic, that is general insurance. So as I told you, general insurance basically is of three types. It can be fire, it can be accident, or it can be marine. So basically, general insurance covers all the types of policies, but not life insurance. That is why it is studied separately. General insurance includes taking policies for all the tangible assets like buildings, factories, godowns, etc. against damages related to fire, theft, or natural calamities. It also covers vehicles and property, that is accident insurance. All the general insurance policies are based on the principle of indemnity. That means no person can get any kind of profit after buying the insurance policy. No insured person will be compensated by the insurance company for an amount exceeding the insured person's economic loss. That means however much costly things you buy, you cannot ask the company to pay you the full amount or more than that amount in case of damage or a loss. The insured person cannot make any kind of profit from the insurance policy. So basically, if you are insuring your particular property for say 10,000 rupees, you cannot ask the insurance company to pay you entire 10,000 or 12,000. So you won't be paid the amount exceeding the insured person's economic loss. So it will be given within the policy value of how much you have taken, and a certain percentage of the rate will be compensated to you. For example, in your account subject, you have chapter number 1, partnership final accounts. In that class, if you paid attention to the adjustments, including all the adjustments, there is only one adjustment which has got 3 effects. Usually, all the adjustments have got 2 effects, but in all the adjustments, there is only one adjustment which has 3 effects. And that adjustment is goods worth rupees 10,000 damaged by fire. An insurance company pays a claim of rupees 7,500. So did you observe, class? There was a damage of your goods worth 10,000 rupees, but you did not get the full amount of the damage. You got only an amount up to 7,500, that is depending upon the policy which you took. So there was a loss of rupees 2,500. So these are having three effects. As you all know, the first effect, you put it on the credit side of trading account. By fire, goods damaged, 10,000. Then asset side in your balance sheet, you write insurance claim, 7,500. And lastly, in profit and loss account debit side, you show loss by fire, 2,500. So this is what is the principle of indemnity. You cannot try to make profit out of your insurance policy. Coming to the first type of general insurance, that is the fire insurance. So what is fire insurance? As the name tells you, it is a property insurance that covers the damage and losses which is caused by fire to properties like building, godowns having goods, etc. Now basically the value of the property is called as the property value. That means how much is your property value, say 12,50,000, 1,20,000. Whatever is the value of the property, that is called as the property value. The insured part of the property, you can either insure a part of your property or you can insure the entire property. That depends up to you. For example, if you have a property worth 12,50,000, you can take fire insurance for the entire 12,50,000, or 80% of the property you can insure, or 50% of the property you can insure. That depends on you. So for the part of the property you are taking the insurance, that is called as the policy value. The amount paid to the insurance company, as I told you before, it is called as the premium. So premium is calculated basically on the policy value by the formula policy value into R upon 100. So we'll be seeing further in the sums class how do we calculate premium. Usually fire insurance is taken for a period of 1 year. The value of the damage is called as the loss. Amount the insured demands under the policy, that means you all saw in the previous example, insurance company pays a claim of 7,500. That means the insured person can ask or demand a certain amount of the policy under the damage case. That is called as claim. So the calculation of claim is policy value divided by property value into loss. So we'll be covering sums including all these formulas. So I hope the fire insurance is clear to you all. Moving forward to the next topic, marine insurance. So basically marine insurance is again insurance which covers goods, freight, cargo, etc. for any loss or damage during the transit by any four ways. That is either roadways, railways, airways or waterways, that is by sea. The entire goods are being covered or protected or insured from the time they leave the seller's warehouse till they reach the buyer's warehouse or go down. The party who will be responsible for insuring the goods is determined by the sales contract which happens between both the parties. The claim calculation for marine insurance is the same as I showed you in fire insurance, that is policy divided by property into loss. So coming towards the last type of general insurance, the accident insurance. In accident insurance, we can insure vehicles like car, trucks, two-wheelers, etc. against a vehicle due to accident. Also, personal accident insurance policy reimburses, that means you get back your medical costs, compensation in case of disability due to accident or death which is caused by an accident. It also covers liability of the insured person to the third party involved in the accident. Again, accident insurance is usually taken for a period of 1 year. So class, with this, the introduction part of your lesson is over. And I hope you all are clear with the concept what we are going to study in the next exercise from tomorrow. So class, tomorrow we'll be starting sums of exercise 2.1, which is based on the topic insurance. So I hope the topic is clear to you all, and we'll be continuing with the sums tomorrow. So till then, take care and thank you so much for listening to me.